All right, let's dive right into one of those real head scratchers from the market. We're going to talk about Micron Technology. This is a company that just put out what looked like a perfect A-plus report card, and then the stock immediately got hammered for it. It makes absolutely no sense on the surface, but stick with me, and by the end of this, it will. So, first things first, let's just look at the number that should have sent this stock to the moon. In their latest report, Micron posted a staggering 196% year-over-year revenue growth. I mean, that is an absolutely explosive number in any market for any company. And yeah, that brings us to the big question, right? With that kind of growth and a report that blew past every single expectation, what on earth would make investors just rush for the exits? That is the paradox we're going to unpack right now. To really get why everyone was so confused, you have to start with the bull case. Because honestly, on paper, it looked absolutely perfect. So let's just break down how ridiculously good this report actually was. You know, the really incredible thing here is just the scale of the beat. They didn't just squeak past expectations, they completely shattered them. Revenue, almost $5 billion higher than what everyone was expecting. Earnings per share, not even in the same zip code. And just look at that gross margin, jumping up to almost 75%. That screams incredible pricing power. Every single metric was a grand slam. And you know, as if all that wasn't the cherry on top, management came out and signaled just extreme confidence by jacking up the dividend by 30%. Look, companies just don't do that unless they're convinced the good times are here to stay. It's about as strong a signal of good health as you can get. And would you look at this? The pros on Wall Street practically tripped over themselves to raise their price targets. Barclays added over $200 to their target. KeyBank jumped from 450 to 600. They all looked at this report and basically said, wow, this stock is still way too cheap, even after its massive run. And this right here, this quote really gets to the heart of why they were so excited. Barclays pointed out that this isn't the same old Micron anymore. The company's signing 5-year deals now, not just 1-year contracts. That creates predictable, stable money coming in. And maybe, just maybe, it breaks that painful boom and bust cycle that used to haunt the memory chip business. Okay, so with all that incredible news, where in the world did the fear come from? Let's flip the coin and look at what was lurking just underneath the surface of that seemingly perfect report. This is the number that just changed the entire conversation. $25 billion. That's how much Micron said it was planning to spend on capital expenditures. We're talking new factories, new gear, for just 1 year, with hints that there was even more to come. And a number that big immediately triggers 3 big fears. First, there's the capex trap, the worry that spending all that cash right now is going to crush their financial results for the next couple of years. Second is what we call peak cycle anxiety, this feeling that things are just so good right now, they can only get worse from here. And finally, you've got the broader macro fears, oil prices, inflation, that always make investors sell their biggest winners first. So here's the crucial thing to understand. That massive spending is a real double-edged sword. The bulls look at it and see Micron building a huge competitive moat to totally dominate the AI chip market for years to come. But the bears, they just see a giant anchor that's going to sink their free cash flow for the next 2 years. And the crazy part is, both sides have a completely logical point. Now, if we want to get an even clearer picture, let's look past the headlines and see what the professional traders, the so-called smart money, are actually doing with their money in the options market. Okay, this number is called the put-to-call ratio for Micron, and right now it's at 1.30. So what in the world does that actually mean? Well, think of it this way. A put option is basically a bet that the stock will go down. A call option is a bet it'll go up. So if the ratio is above 1, it means more people are buying puts than calls. A ratio of 1.30 is a pretty bearish signal. It's telling us that traders are actively hedging their bets, preparing for the price to drop. And here is the key insight. Even after that absolutely spectacular earnings report, these pro traders, they aren't getting rid of their downside bets. They're keeping their insurance policy active, which is, well, it's really unusual, and it suggests they think the selling might not be over yet. The options market also gives us a kind of battle map for the stock. Traders are looking at 450 as a big psychological line in the sand. Below that, you've got 430. But the real floor, the level where the most bets are concentrated, is way down at 400. For the big money, that's the point they're really watching.
So, how do we tie all this together? You've got a flawless report on one side and a genuinely scared market on the other. It really all comes down to a massive tug of war between two completely different stories.
And this slide really nails the entire conflict. The bulls, they're laser focused on the long-term fundamentals. They see those 5-year deals, the unstoppable demand from AI, that massive pricing power. But the bears, they are completely fixated on the short-term risks, the cash flow problems from all that spending, the fear that we're at a peak, and all those dark clouds in the broader economy. So the big takeaway here is that the market isn't being irrational at all. What we're actually watching is a completely rational fight. It's a battlefield between a super compelling long-term story and a very real, very scary short-term risk. And the stock price? It's just the rope in that giant tug of war. And that leaves us with one final, and I think crucial question to chew on. In a situation like this, what actually wins? The incredible, hard numbers that show how great things are today? Or the powerful, fearful story about the risks of tomorrow? That, right there, is the heart of Micron's paradox.